What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. The weekend is here, and that means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technicals from all the major FAANG stocks, plus Microsoft and Tesla, and we're throwing the dice in the table this week when we take a look at Netflix again. There were some news items and also a technical chart that I want to show you from Netflix. For those of you that are missing Netflix, it brings back this week. Now, there's a small amount of echo. I'm in my cabin this weekend, so my apologies if there's a little bit of echo. I'll try to remove that in the post-op. Now, let's kick things off like we always do with Facebook. Started the week at $189 per share, ended the week at $216 per share. That was a 14% gain over the last 5 days. You better believe it. When you go up 14% in 1 week, you made a reversal pattern, and pat yourself on the back if you happen to get in on Facebook, because it did flash a buy signal. We'll talk about if you missed Facebook and a couple of these other stocks like NVIDIA also flashed a buy signal. It's nothing to worry about, okay? I'll point out some areas where I think these things will likely pull back in the coming days, maybe this upcoming week. You can stick your neck out and buy the dip on some of these other stocks if that's what you feel like doing. Mark Zuckerberg says that NFTs are coming to Instagram in the near term, although he did not give any details on that. We should see NFTs in some sense, likely the minting and the selling of them on Instagram in the foreseeable future. And that's nothing to be, really news item, because this company is slowly moving into the metaverse, and obviously NFTs likely to play a pretty strong role into that if that happens to be pretty successful technology. Google buys startup Araxium for its future AR and MR devices. This is according to a report. I just happened to throw this in there. We'll talk about more about this here in a moment when we get to the Google news item. But what I wanted to do is show you that it's not a foregone conclusion that Meta or Facebook is going to have this dominant position in the metaverse, okay? They are going to still have to play. Look, they have a dominant position when it comes to social media. You could argue that TikTok is kind of knocking at their door, and there's a couple of other sites that take away a little bit of market share, but for the most part, they have a dominant position in that space. When we move out to the metaverse, it could be a far more fragmented business model. Moving on to Apple, started the week at 152, up 7.8% during the week, ended up strong to 163. We'll talk about this from a technical perspective here in a moment, but the Apple App Store in Europe could undergo significant changes. This is according to news items in the region. They are noting that there is a bill that has been long debated and is looking to maybe potentially pass that would allow third parties to process payments outside of the App Store payment processing methods. That allows Apple to take a pretty large cut, I think a 1/3 cut of all those transactions. It would also allow you to maybe have a separate app stores as well, not just have to go through Apple's. Apple's argument is that this makes the App Store and its software and its phones far less safe than it normally does. But look, that's not going to float it with regulators, okay? Who's lining the pockets of regulators? Those that want to avoid paying these fees, the game makers, the Googles, the other companies out there that want to skirt around these fees. Well, they're paying these lawmakers big bucks. Apple is not going to probably be able to get around this. I think the days are numbered where Apple has a complete control over their ecosystem. We'll see if that turns out to be a good prediction or not. Apple supplier Foxconn to restart their limited production in their Shenzhen operations. This is obviously where the vast majority of Apple products are made. This actually preceded a press release that the Foxconn was actually shut down, and then now we're seeing a limited opening of that. Certainly something to keep an eye on. Now, speaking of Foxconn, they're debating a $9 billion facility in Saudi Arabia for its chips, EVs, and parts. Certainly, as an Apple shareholder, I think this would make me feel a little bit more warm and fuzzy inside if this company started producing more of their products in other regions. I think they've started taking operations or manufacturing out to India. Obviously, Apple is contracting all their manufacturing, and so they have to rely on a Foxconn to move around to other different regions of the world. I don't have to tell you what's going on over in Russia and how China is involved in that, and obviously the deeper that gets, and obviously we have a little bit of virus news news as well this week impacting China as well. We are fully exposed to China when you're talking about Apple's manufacturing. It's certainly obviously they can't pivot this. This is a gigantic Titanic ship. They can't pivot this and start manufacturing this stuff in other regions of the world, but slowly over the next 12 to 24 months, I think personally it would be wise to see Apple continue to do that. Now, Apple's watch maintained its #1 spot in the smartwatch market, although their percentage of market share actually declined. Last year, they were sitting at right about 33%. Now it's closer to about 30% on that Apple Watch. They don't break out the Apple Watch in terms of revenue, but they had $14.7 billion in revenue in the wearables market, and most of that is either going to be the earbuds or these watches. There's some speakers and some other stuff. That's probably a very small amount of revenue for Apple. Obviously, this is a big product for them. My guess is one day they will be forced to break out those numbers. Moving on to Amazon, start of the week at $2,926 per share, up a solid 10% to about $3,228 per share if you include the after-hour gain that I'm seeing here. Amazon closed on its $8.5 billion purchase of MGM Studios. This is after receiving approval from Europe last week and a little bit of pushback from the U.S. Trade Commission, but Amazon essentially forced their hand into this one. They gave them kind of a limited time frame in order to fight this, and we've been saying it here on the channel month after month since this deal was announced that this likely was going to get a little bit of noise in that sense, but they were going to be able to close this deal because they don't have a dominant position in streaming video and this type of thing. Obviously, though, the addition of MGM Studio makes Amazon a big player when it comes to that. Moving on to NVIDIA, started the week at, is that right? $218 per share. Yeah, you betcha. End of the week closer to $264 per share. That is 20% gain on this one. And yes, I'm back in NVIDIA shares. When you go up 20% in a week, it flashes a gigantic buy signal. And when you're sitting around your cabin watching March Madness basketball, you got the stock chart up as well, and you're hitting the buy signal on this one. We'll talk about, though, if you didn't get back in NVIDIA or you wanted to buy the dip on it, don't worry. There's going to be other opportunities. I'll point those out when we get to the technical segment of that. Not a lot of news out of NVIDIA. Moving on to Netflix. Yeah, you Netflix fans, we're getting back into that this week. Started the week at $337. This one's up 12%. I mean, stocks just ripped this week. It was just amazing. Netflix ended the week at about $380 per share. Some news items I want to share you about with Netflix that gets me kind of excited. This is actually one of these stocks. Look, we've had a lot of stocks pull back, and even though we're up 12% this week, you look over the last month, the stock's still down. Look over the last 6 months, Netflix is still down 30%. Okay, we're not trying to get these at the bottom, but we're certainly not trying to ride these down like we're trying to ride down the side of a ski slope with our snowboards. Okay, so Netflix is a stock that I'm looking to get back into because I think the valuation is starting to make a little bit of sense, and some of these news items get me excited kind of as a potential shareholder. Netflix to test a password crackdown through payment for extra members. So what some people brought up is, look, people share their Netflix password, and you might have one account and it's your mom's or it's your brother's or whoever, and everybody's kind of sharing it. Well, it looks like what Netflix is going to test is maybe a small fee on top of that to kind of crack down on the number of users. Now, what analysts are bringing up is the fact that they're actually skeptical of this plan to crack down on passwords, and what they think it could potentially do is cannibalize the people that have a single sign-on membership. So if I have a membership and I am the sole user of that, well, it might make sense to maybe tag team up with my brother or my sister or my cousin or my roommate or my friend or whoever it might be, and then we share a membership instead of each of us kind of having our own. We'll see what happens there. I think it will be negligible, though, in terms of that type of thing. But Netflix, this is what has me excited as a potential shareholder in Netflix. They say they won't say never to ads as the rivals set up cheaper streaming tiers. So you have rivals like Roku, obviously Amazon. You have a number of other ones out there that have other different business models. Netflix primarily, as you know, only relies on subscription charges. At some point, I would love to see them kind of have a hybrid approach. When we look at the revenues and the success over at YouTube, whenever we go through Google's numbers, well, I tell you what, it makes me excited about the online advertising business when it comes to video, and I think Netflix could be a key player in that if they jump in very soon. Moving on to Google, started the week at $2,585 per share, ended up about 5% up to about $2,721 per share. Google is set to appeal a record EU fine for a September decision, so we should get a decision on this by September. This is a $4.7 billion fine. Typically what happens in these decisions, you get levied with a fine, then there's like kind of an appeal, and maybe the fine gets reduced a little bit. All things being considered, a lot of lawyers getting rich here, and eventually Google will have to fork over a couple $2 billion more than likely. Now, here's this story that we brought up when we were talking about Facebook. Google buys the startup Araxium for its future AR and MR devices. This is also a sign that these companies like Google, they obviously bought Fitbit several years ago. They're buying these types of things. They want to get closer and closer to the manufacturing of these products. I actually think this is a very, very good strategy for Google because they already have the Android software, and now they're going to pair kind of the technology around it, the sensors, the devices. Obviously, that's what Apple has been doing to a certain degree, although they don't manufacture that. They own kind of the chip technology and some of these other things, and then they farm that out, farm the actual manufacturing, the assembly out to obviously Foxconn. We'll see if Google takes that similar road, but I kind of like what Google is doing in that space. Moving on to Microsoft, started the week at $281, ended up about 6.5%, up to about $300 per share. Microsoft declared a 62-cent dividend earlier this week. That was in line with their previous dividend, and you got a forward yield of about 1% on this one. Obviously, as they raise interest rates over at the Federal Reserve, becomes less significant, but certainly is an advantage when you hold these shares. You're able to collect that dividend, obviously. Moving on to Tesla, start of the week at $763. Hello, 18% gain. Interesting, though, from a technical perspective over at Tesla. And when you stretch this out to 6 months, it is still up over the last 6 months, but over the last month, we're basically break even on this one. We ended the week at about 904. We'll talk about this from a technical perspective. Some of these stocks made clear buy signals. Other ones will maybe flash them next week. So if you didn't get in on any of these stocks, you didn't realize some maybe newer gains. I mean, you still probably should have been fully invested in the stock market. But if you did not realize any of the gains that we saw this week, I mean, we got like 4 or 5 days of up days in a row. Don't worry. Next week could bring the same type of thing. Inflation hits the EV industry as Tesla raises its prices. This gets me excited as a shareholder. Obviously, we saw that this week they raised the price across the board 5 to 10% on all their vehicles, most of them up a couple $1,000. If you've already locked in registration, this is music to your ears over at Tesla. I just anecdotally as well, I have a Model Y on pre-order expected to get delivered this month in March. Well, that got pushed back all the way to September. So they're seeing extraordinary, I mean, we're talking about extraordinary demand over at Tesla. Now, they did halt their bond sale tied to auto leases. This was mainly due to the fact that the bond market was just kind of crammed up, okay? Obviously, maybe you have interest rates kind of changing this week. Might not have been a lot of liquidity in that market. We'll see what goes forward with that, but all things being considered, probably something that Tesla will be able to work out in the coming days ahead. Tesla suspended their Shanghai factory as the COVID-19 outbreak worsened, but what we didn't see as a follow-up to this press release, I actually think I saw this on Twitter, the fact that Tesla was able to open this factory up, just like Foxconn opened up, kind of maybe a reduced capacity. We saw the same thing with Tesla in terms of their Shanghai factory. Elon Musk said he still owns and won't sell his Bitcoin, Ethereum, and his Dogecoin. So take that for what that is worth. Moving on to the technical segment of the show, and this should be absolutely fantastic when we're talking about Facebook. This stock signaled a buy signal. Okay, I'm going to actually zoom in here and really show this to you. Okay, we flashed the buy signal. We talked about how this stock, we didn't necessarily say, hey, this could be the bottom. We thought maybe it could, but how you would be confirmed of that is actually 2 green candles, and really you wanted to get above the previous cluster of highs here at 208, but this green candle right here was enough for me. I jumped in somewhere on this candle here, and so I'm back in on Facebook. Now, the beauty of being patient is now my stop loss is pretty well confirmed here. When I buy stocks like this, kind of on the breakout, kind of start new positions on these, I do have stop loss. Now, if I've been holding a stock for a long period of time, like if you have Apple at $80 split adjusted or $40 split adjusted, wouldn't really concern me with that one necessarily. Again, if you're trying to preserve your capital, certainly those stop loss. But whenever I start a new position, I do like to have stop losses in place just in case this was a temporary breakout. It's certainly could play out that way, but I do have the stop loss set down here. I think I set it pretty low at about 185 on this one. You wouldn't want to break below the previous lows on that one. That would basically mean that your uptrend is completely over. Now, some of you might be saying, I missed it. I was watching basketball. I was working. I was playing with my kids. Don't worry. We have overhead resistance up here again at 220. I would expect this stock to make a pullback. And look, it can make a deep pullback, because when we talk about these uptrends, look, it could pull back as long as it doesn't pull back below about 188. It is still making a higher low there. That's why we wait for these stocks to break out from these downtrends. It actually makes the decision making a lot easier, okay? And so I would absolutely expect this one to hit its head up here at 220. Look, if it doesn't, no big deal. Let this baby ride. You can pick this up on this momentum. The next stop, if you break above 220, the next stop is all the way back up here at 240. Now, I would expect some significant demand, or excuse me, significant selling pressure up at 240. You have this gigantic volume candle that people bought the initial drop on Facebook. I would expect some of those people to want to step in and kind of take their money out and kind of break even, okay? And so I'd expect some selling pressure. Now, that's the extraordinarily bull case. I would expect this stock to pull back. You've got buying opportunities anywhere on the pullback down here to 197, all the way back, like I said, all the way back to the high 180s on this one. I think if you want to, you can buy the dip. And then again, if you want to be safe, you set a stop loss under the previous lows, because if you break below those previous lows, it would basically mean this was just a temporary bounce, kind of a bear market bounce, if you will. And all of a sudden the stock is heading lower. Moving on to Apple. Now, completely different story than what we saw over at Facebook. Okay, I'm going to zoom out on this one. Notice that our downtrend with Apple is actually still intact. This one has not really confirmed that it's broken out. So if you missed Facebook, if you missed NVIDIA, which I'll show you here in a second, if you missed those breakouts, don't worry, because you might get your opportunity with a stock like Apple. Notice we came up here to the top of the range. Look, this upper channel line, it can be drawn in a number of different ways, but we essentially came all the way up to it. You're looking for a similar action to Facebook. You're looking for at least one, maybe potentially two green candles over that. That would be an incredibly bullish sign. You do have some overhead resistance up here at about 167. That's about $3 or $4 higher than where the stock is right now. So I'd expect there to be some resistance. If you break above that, incredibly bullish. You could play the run from 167 probably all the way up into the mid 170s on this one. That would be an incredibly bullish run. That would also signify that at least in the shorter term, this stock has completely reversed. Now, that's not to say that this thing can't come back, so don't be concerned if we do see pullbacks with Apple, as long as you start to make some kind of upper channel. Now, this one has not made it like we see with an NVIDIA and like we see with a Facebook. We are still technically in a downtrend. In fact, we just kind of confirmed potentially maybe a lower high here. You put up a big red candle here next week on Apple. Well, I would expect the bottom end of this range down in the 150s to be retested. So a little bit of a mixed story when it comes to FAANG. And again, if you missed the breakout this week, you missed a little bit of that price action, don't worry. You'll have another opportunity, I think, next week as well. Moving on to Amazon, a very similar story to what we're seeing with Apple as well. Okay, we have broken up in the shorter term. We've gone from about 27 all the way up to 32. But look, there is still a downtrend in this stock. You have a high here, a lower set of highs along here, another grouping of lower highs, and we did not actually increase above the lower set of highs here at about 3,200. We would have had to get closer to about 3350 on this one. There's a level of kind of resistance and support. It's sitting right on the level right now, right at about 3225 at this stock. With Amazon, you're really obviously looking for it to go one way or another. If it breaks down, I wouldn't be in any hurry to buy the dip on this one, because if it does break down, it could come all the way back down and retest into the 2,800 level. I think that could potentially be a buy if you're not already overweight these stocks. I'm already overweight tremendously on Amazon, not necessarily a stock I'd be really looking to buy. Now, on the bull case scenario, you get some candles up above the area where we're right now, probably more specifically up here at 3,300. Hello, 3,500 on this one. And then obviously the really bull case scenario, we're looking looking to get above 3,700 on this one. I'm obviously incredibly bullish on this stock. I have not sold any shares, and it's the largest position that I have. Now, speaking of buy signals, let's take a look at NVIDIA. It flashed the exact same signal that we saw over at Facebook. We'll zoom in here on the most recent price action. Notice we had our downward red channel here, and we broke one candle above it. That, I mean, if you're really aggressive, I tell you what, you could step in on that candle. I actually was sitting here yesterday. I stepped in on this second green candle. This was also your buy signal, and hello, short-term gains. I actually nailed this. Now, in terms of our stop losses on this one, I have a stop loss or set down here pretty low, okay, down here at about $200 per share. I'm expecting NVIDIA, I'm expecting Facebook to pull back, but as long as it doesn't pull back below the previous lows, which right now are at about 208, 210, as long as you don't pull back to all the way down below that, if you put up a big red candle, but then you bounce again, another, just all buy signals all across the line here, because this will start creating lower sets of highs and will start to create an uptrend with the stocks over at NVIDIA. It looks incredibly good. Don't be concerned if you didn't get this initial breakout. It's okay. Now, could this stock could absolutely create a little V-shaped recovery. Sure, all of these stocks could potentially do that. I don't think that's probable. I think the more probable thing is these things get overbought and we see some selling pressure on these ones and you get pullbacks. I think you could buy the dip on these pullbacks. Moving on to Netflix, one that we haven't looked at in a while, gap down on earnings, came all the way down south of about $350 per share, had an initial rally as I think some activist investors, or at least David Einhorn or one of these guys kind of got involved in this stock, but then came all the way back down and retested a low down here that I can't really see, but it's a long ways down, and now we're back here at a level of support at about 380. I'm going to zoom in here because I do want to show you that while we made a big V-shaped recovery, we still are technically, what I would say, are making lower sets of highs here. We got a high set up here at 450, lower sets here at 410, lower sets here at 380, and another lower set here at 370. Now, if this momentum continues into next week, into Monday, incredibly bullish sign. You could probably step in there, even on the shorter term, and buy Netflix, because you have the next level of resistance is up here at 415. You could play the bounce from like 390 up to 415 if you wanted to. I'm talking more shorter term here. If you're longer term, if you're trying to dollar cost average into these names, or kind of, I prefer more like adding to your position. This can be an area where you add. Now, if it breaks down next week, we get red candles next week on Netflix and NVIDIA. This goes for Facebook as well. You get some red candles, not something I would be necessarily concerned about, as long as you don't get below about the 330 level. If you want to set a stop loss, there's areas down here, probably south of 330. I would not want to see the stock get below that. That would basically just confirm that this down channel is still intact. Just like Apple and just like Amazon to a certain degree as well, this stock is still technically in a downtrend. That's why I'm watching this one very, very closely next week. You break above this level, even just marginally, I think that can be a buy signal. If you want to be ultra safe, you could put a stop loss down here at an area of support at 380, play the breakout again. The thing that we really like about Netflix is you've got a big gigantic gap here. This stock could easily rally from like and I mean, it tried to initially after earnings. It rallied from like 350 up to 450. I think you could see a similar type rally if you get momentum in this market. That's why I like a name like that. It has high momentum. Now, moving on to Google, looks very much like Amazon in my opinion. You've bounced off a low area of support. Now you're at an intermediate area of resistance up here at about 3750 or so. This one is still technically in kind of a downtrend, but we're more or less going sideways between about 2500 and 2750 on this one. Anytime you're south of about 2600, I think it can be a buy with Google. Anytime you're above that 2700 level, if you want to sell, you want to lighten the load on that one, certainly it could be something you can do with Google. Moving on to Microsoft, this one also broke out. You might say, well, did I step in here and buy this one? Well, no, with Microsoft, a little bit different strategy because I was already kind of underweight. Microsoft was like the one FAANG name I was underweight, and there's no excuse for it. Okay, this is a fantastic company. It just was not a company I was able to consistently buy. I was building up positions in Amazon. I was building up positions in Apple. So I actually stepped in here and bought the dip. There was an area of support down here. I'll zoom back out. There was an area of support down here between 270 and 280. I was actually buying the stock stock down here. So I didn't necessarily step in and buy this initial breakout. We see though, you did have a breakout of this upper channel. This happens to be a green line. I'll change it to maybe like a purple line. So you broke out one green candle, second green candle. You could have bought it either of those candles, but especially the second one. The third one here did not get above the previous areas of highs, but it's pretty close. We'll see if this momentum carries over into next week. You've got some overhead resistance over at Microsoft in the 308, 310 area, somewhere right here. These are not, there's nothing firm with Microsoft. There's like candles all over the place. So, you know, when I shout out a number, plus or minus 4 or 5%, quite frankly, on this one. This one looks pretty good, but it wouldn't surprise me at all if you have a little bit of a pullback, as long as you don't get below the previous lows, which are south of about 280 on this one. That would signal that this potentially is back in an uptrend, and I think you can accumulate it if that is the case. Last stock we'll look at today, we'll get you on to your weekend. We're going to take a look at Tesla, and that has pulled all the way back. We've had this kind of lime green line on this chart for forever, basically. That's sitting at about $900 and $905 per share. The stock pulled all the way back up to that level. That is a significant level with Tesla. If you can get back above the $900 level, wouldn't necessarily guarantee that it's off to the races, but it certainly could. You get above 900 and there's not a lot of clear resistance above this stock. If you get rejected here at the $900 level, I wouldn't be concerned as long as you don't get below 763. Let's say we put up a red candle next week. Momentum leaves the market. There's profit taking. No big deal, because look at the formation you're starting to make now over at Tesla as you're starting to do maybe potentially something like this. I would absolutely love, and in fact, we're actually crossing our fingers that we see a little, not a ton. We have some buyers left in this market, but some sellers show up as well, maybe some profit taking, some loose hands. Well, we shake those people out. We buy this on this rebound here, and then now we're starting to look like we're starting to reverse with these stocks. Let me know down in the comments, did you play any of the momentum? Did you get back into any of these names? It comes so quick. We've talked about here on the channel how stocks like Facebook, oh, we're out of them, but man, they can reverse in a heartbeat. This could just be a temporary breakout. These could be temporary moves that we saw this week. The stock market was incredibly oversold to the downside. These could absolutely be temporary things, but we couple what we're talking about here on the FAANG Stock Recap Show, the fact that we know the numbers with every single one of these stocks. We know the numbers. We know how much cash they have. We know the fundamentals of all these stocks, and they're incredibly bullish. So we're more than willing to come in here and kind of stick our neck out and buy these dips after we start making what appears to be potentially a nice little reversal pattern in the major FAANG stocks. We'll see if it carries over into next week. I think you have opportunities absolutely with Apple moving into next week. You also might have Netflix as well, and certainly Tesla will be the three that I'm looking for, but depending on your portfolio concentration, could be some of the other names as well. Hopefully you guys enjoyed today's video. Enjoy your weekend. We'll be back again next week. Good luck with your investments.